Now it's time to hit social media for our hashtag segment. For that, we bring in Megan Brantley. She's a Vice President of Research at LikeFolio.com. And our fast market contributor, Jenny Horn. We're taking a look at McDonald's today, Jenny. I'm sure there's plenty on Twitter and social media as far as this company goes. People love, showing that the food they're eating.
They do. People love, the joke is that Instagram saw it first, right, with your meal, because people love to post pictures of their, yeah, right? That's very popular these days.
If I see one more picture of avocado toast, I am going to hurl.
Yes, so not so much McDonald's, but that doesn't necessarily...
No avocado toast at McDonald's.
Yeah, not so much at McDonald's, but that doesn't really matter to the stock. It's up 15% in the last 12 months. Of course, they had earnings Wednesday before the market opened, and they said that prices were actually those higher prices were offset by their declining foot traffic, so they actually had really strong earnings from the company, and they said they actually expect the impact of the coronavirus to be minimal. So these were all good news for, of course, McDonald's, but the more interesting stories, like you said, social media, plant-based meat is becoming so popular. Beyond is something we talk about all the time on the shows.
And there it is.
And you can't avoid it.
We can't even talk about McDonald's without talking about plant-based
It's a fad.
meat.
It's going to go away like acid wash jeans.
Oh!
I don't think so. So that brings me to our first tweet, which says, I went to McDonald's today and I noticed nearly all of the burgers had vegan versions. The world is really changing for the better. For the better, you guys. See, doubters. But okay, Megan, my question to you is, how much do consumers care about this? Because it seems like right now, like Tom said, it could be a fad. But does it actually matter to a McDonald's? Does it actually matter to their bottom line?
It's interesting, and it's so funny that you say that. The plant-based trend is such a polarizing topic, and we track a lot of these different diet type trends, right? We're listening for people who are talking about the keto diet, a low-carb diet, vegan, vegetarian, or any of these different ways that they could be eating. And by far, the plant-based diet is the most showing the most growth year over year. I think that's around 165% year over year, which is just insane. You can see it ramping up. And this is across multiple things. Not only are people looking for plant-based meat options, they're also looking for, plant-based dairy options. And I think that in general, the key here is that people aren't switching, they're not ditching meat completely, right? They're just reducing meat consumption and maybe replacing a couple of items in their diet here and there with a plant-based option.
Megan, all I can do when I think about this is think back to the Seinfeld scene with Newman going, "Vile weed," as he eats the broccoli. And that's what I flash back to. But here's my question to you is, I'm sorry, I had to do that.
I had to do a dad joke today. It's Friday.
It's Friday. I'm short on everything here. So here's my question to you, though. Of course, the growth numbers are going to be big, right? Because when you go from 0 to something, all these numbers are going to be crazy big. But is it consistent? Are they still growing at good paces? Are we going to be able to look a year from now and say these growth numbers are still massive, or is this going to trail off like acid wash jeans?
We actually started watching this last year. That's when this started to creep up in our data. So it's persisted for a year now, and it's still ramping. This is something that we will continue to watch to see, as you mentioned, is this a fad? But I think it's interesting in our coverage universe. We track, all of these different companies, all these different brands and products. And I think we have 7 different companies that we're tracking with 13 different plant-based items like on grocery shelves. That's outside of the big ones like Beyond and Impossible. So these big names are actually investing in this and bringing this to consumers to meet demands. I don't think that they would be bringing these items to market if the demand wasn't there. We're definitely showing that consumers do want plant-based options for especially types of meat like the red meat options. I think that we do still see a lot of people who like, chicken options as well. So that's something to consider, the type of meat that they're replacing and also the type of plant-based item they're replacing. Maybe they're replacing their creamer.
Yeah, Megan, that's a really interesting point, because actually in this earnings report, the CEO came out and said we're going to make more aggressive strategies to have more chicken options. So I thought that was interesting. So less red meat, more chicken is kind of, I think, a trend now. But I'm curious if this has any impact on their happiness, because you have a company like Dunkin' Brands, you have, of course, Burger King. They're all coming out with these Beyond and Impossible options. And McDonald's has only rolled this out so far in Sweden and Finland and Canada. So this is not yet in the United States. But do you think that consumers are generally happier with these options because now they just have more options?
Yeah, it's interesting for McDonald's, like you mentioned, it's not really moving the needle in our data yet, right? We can't see an impact based off of the tests that they're doing in, I think, like one city, or like the places that you mentioned in Canada and overseas. So what we can look at, though, is QSR, which is, the parent of Burger King, Tim Hortons. And what we see there is, it's interesting, the Impossible Whopper drove purchase intent up for Burger King year over year for about 3 quarters, but now we're seeing it start to wane. In a opposite fashion, whenever Tim Horton released their Beyond products, we actually saw a really negative reaction to those. So it's something that I think that consumers are excited about when it's released, and they may go try it. But according to our data, looking at QSR at least, we're starting to see a normalization. So maybe not sustained increased traffic from those new items.
Yeah, and I think this is one of those names that's so fun to look at on social media because, again, like I said, Instagram eats first. People love to tweet about their experiences about eating.
I never heard that before.
Oh, yeah. We're going to use some
first.
cool wisdom on this Friday. Actually, I don't know if that's necessarily cool, but I love looking at McDonald's. I mean, it makes me hungry. And talking about breakfast, breakfast is a really hot topic on Twitter. And I mean, I was just like salivating reading these tweets. But our next tweet is from Michael Wallace, who says, I like McDonald's, high RSI, only 5% above 200 daily moving average. Good earnings sold off needlessly due to issues that have no negative bearing on operations. Probably better off now. I like the defensive nature going into February, also nibbling. Okay, so question to you both. Typically we talk about these companies on the show prior to earnings. Of course, they already had earnings. So how would you go about making a trade in this name, given the fact they're about roughly $7 off their all-time highs? But they do have this China exposure. That does matter. Even though the CEO said it's minimal, I mean, it does matter. The stock is down today.
Yeah, 3% of their operating income is based out of China. Mm-hmm. So they still have a lot of stores over there, but it's not a major impact. And if you look at U.S. same-store sales were up 5.1%. Global same-store sales were up 5.9%. So it doesn't seem to be hitting their bottom line. I mean, that's not to say that they haven't closed some restaurants over in China, which will have some type of impact. But if you look at the quarter over quarter same-store sales growth, Kevin, we're always talking about 4 to 6% in McDonald's, and this is a legacy brand, and they keep doing things right.
And if they do things right, and they have been doing things right, they have the scale to absolutely knock it out of the park with any new item that might take off, or when they went to all-day breakfast, or all these things that they've put out in the last few years that have caused their stock basically to, go up so exponentially. And so, I just think one of these things, great companies, weakness on great companies is what good traders look for, right?
Right.
Bad news on a great company, because you know what it's going to be? Temporary.
Yeah.
And you know what else is actually really cool? They're spending, I think, $1.3 billion in capital expenditures this year, and the CEO said a lot of that will be on store renovations. They're going to have these high-tech
more
kiosks.
Automated.
Yes, so less interaction with people, which, Megan, I have to think that makes the consumer happier, because I feel like we talk about all the time, the consumer likes to interact with people as little as possible.
Yeah, it honestly reminds me of kind of like a play out of Starbucks book.
Right.
They're increasing the they're increasing the ticket size of the consumer, and they're making it easier for them to purchase. When we look at McDonald's too, like you said, it's such a strong company. Their top tags, it's interesting, we look at a product level. I think Kevin will appreciate this. It's the Big Mac, McFlurry, and Happy Meal. So, their key market is still pretty healthy, and they're coming for their Big Mac. So I'm not sure that this plant-based topic or trend is really gonna seriously impact their future. I think it's smart that they're testing the waters and taking their time to see if it's worth the investment. And I think so far consumers are pretty happy. Their happiness is actually improving just a bit, and that's a positive sign. A Big Mac, McFlurry, and Happy Meal, 3 pillars of the millennial diet. Exactly.
Now, Megan, I just noticed on some of your consumer sentiment as far as McDonald's goes, it was starting to wane a little bit as far as the positivity of it, even though the stock's, just about $5-6 below its all-time highs. Is that a trend that's going to continue, or do you guys at LikeFolio seem to think that, hey, this is still a good stock even though sentiment's come off a little bit?
I think that from our purchase intent, the things that we can't capture that McDonald's is executing really well on is that increased ticket size. And, we're not going to increase pricing. So I know that whenever they improve their revenue based on those things, we're not necessarily going to capture that. This is mentions of consumers who are actually going to McDonald's or ordering something to McDonald's, and maybe it shows a little bit of a testing in that foot traffic, but I think that the technology investments and improvements that they're making are helping to offset that.
All right, Megan Brantley, she's a Vice President of Research at LikeFolio. Thanks for joining us once again, Megan, and thanks to Jenny Horn